Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me this morning is Tai Wong, independent proprietary trader. Good morning, Tai, and thank you so much for joining me.
Good morning, Remy. Great to be here. I couldn't say it's a lovely day outside. I mean, there's the occasional downpours, which I managed to miss, but it's actually quite balmy. I mean, I didn't even need a coat today, so I guess I'll take what I can get.
Well, as you mentioned, it is warm here in New York City. It's supposed to be a high of 60, unseasonably warm. But given that New York City is in a drought, it is nice to have a little bit of rain. But I knew that today is an important day, not just because we got inflation figures out in the U.S.
Well, I was looking through it to December 11th, and for the historians among us, 1936, when King Edward VIII abdicated his throne in order to marry the American divorcee Wallis Simpson. And times were a little bit different then. You couldn't. I mean, you're the king of Great Britain and and United Kingdom and Northern Ireland, and you couldn't go and marry a divorcee. Much different than what we have seen with Prince Charles today, and King Charles today, and you wonder if everybody would have been much happier if he had married his first love instead of Princess Diana in that case. It's also, we should remember the birthdays of two pretty prominent people. The great Soviet dissident Alexander Solzhenitsyn, who wrote the Gulag Archipelago. Really famous work. I did try to go through it, but it is a big tome, and I have to admit that I never really quite finished. And also for New Yorkers, it is the birthday of Fiorello LaGuardia, the legendary New York City mayor in the 1930s and the 1940s.
So today is a day to remember, and in terms of the markets, we initially saw the markets open higher on the heels of consumer inflation data, and of course there are a lot of expectations heading into this morning, especially ahead of next week's Fed meeting, and we did see headline and core CPI figures come in line with expectations, but year over year CPI up by 2.7%, but the Fed's still expected to cut by 25 basis points next week.
Absolutely. The odds priced into the futures markets went from 90% chance of a cut next Wednesday to 97%. So it's basically what they call in horse racing a mortal lock. It's absolutely going to win. Absolutely, that horse is going to win, and this is absolutely going to happen. Unless we see a note from the Wall Street Journal. I don't expect it. It would be a big surprise. I do think the Fed, I think Powell, and I think the Fed it wants to cut and is happy with cutting this time. And then 75% of the market expects no move in January and a little more balanced in March. I mean, after all, at the end of the day, 2.7% year on year and 3.3% in core CPI is quite away from 2%. At the same time, at 4.5 to 4.75%, the view is we are well into restrictive territory, and rates could clearly be a fair bit lower before it impedes before it really starts to stoke inflation. The couple of troubling things about inflation is, and hopefully it doesn't last, but food inflation was up sharply, as well as hotels and leisure, and this is a time of year, perhaps, I'm not actually sure if that piece of the data is seasonally adjusted, but certainly, we had a guest here last week, Jared Dillon, who was telling me that a hotel room is almost $1,000, where twice what he normally pays. So I don't know if that's seasonally adjusted. I would like to think it is, but hopefully those things are a little bit transitory. I think the view is the Fed is not looking to cut down to, at this stage, to 2.5 or 3%, but they think that we're in restrictive territory. We have some room to cut, and let's do it now. Additionally, I would add that the Bank of Canada cut 50 basis points just now. This is the second back-to-back 50 basis points cut they have, and largely expected. There are a few teetering between 25 and 50, but in their statement, they said, in press conference, they said essentially we're moving away from these big cuts. It's going to be sort of smaller cuts from here on in. This is important for Canada because they have mostly adjustable rate mortgages that adjust every few years. So there's a lot of mortgages that have sort of been extended and pretended. that people will have to refinance over the next couple of years, but and lower rates will help those homeowners.
And I'm glad you brought up mortgage rates because here in the U.S. We were looking at mortgage refinance demand, which surged in the latest week as interest rates fell for the third straight week. So what do you make of that data point?
Certainly, it shows how sensitive some of the mortgages are here. We're largely unchanged. I think we're a couple of basis points lower than it was last week, but you did see a little bit of a pickup in sort of refinancings as well as new mortgages, not anything substantial to really write home about to get any mortgage brokers excited and buying themselves something nice for Christmas, but it's kind of a start. And I think if we get these 25 basis points and the Fed looks like it's on hold, you might get a few more mortgages refinanced or mortgages taken out. But again, this is the holiday season is, I think, seasonally not a great time for it. We may have to get into January, February, that are certain January. But it does show that there are some people who do want the mortgages, and if rates continue to tick lower, we'll see a little bit more activity.
Yeah, and Tai, as you mentioned, it is the holiday season, and as we look to year end, and of course 2025, there are a lot of expectations in terms of what happens in the nation's capital.
Right.
And I know that you wanted to highlight Trump tapping Andrew Ferguson to replace Lena Khan as FTC chair. So let's start out by looking at the headlines this morning.
Right. So Lena Khan was a sort of divisive person as the head of the FTC, a former professor. She's been really, really anti-merger. She hated practically every merger. I think she cut down the merger between is it Coach and the parent of Coach and Michael Kors. I mean, these are pocketbooks. There are plenty of pocketbooks out there. Does the FTC really need to get involved in that? And it really kind of scotched that merger. And a lot of people, including myself, are saying, well, is that really necessary? And really, big business, from the left and the right, really did not like her. Famously, the head of the CEO of LinkedIn quietly really wanted her removed, whether or not, despite whoever won the election. And that had to come out with a 1,000-page screed that said, well, no, I don't really want her removed. No, just say what you gotta say, right? But interestingly, there are populists on the right, including Vice President-elect J.D. Vance, who are actually quite supportive of her stance, especially against big tech. A lot of the populist right, has been suspicious of big tech because primarily what they did to President Trump after the January 6th problem in 2021, and felt that they can't be trusted to be fair. And the only platform that they can trust really is Twitter, or now X, which is run by Elon Musk, who sort of lets people write whatever they want to write within reason. But she's out, and Andrew Ferguson, who was a former Solicitor General of Virginia, is taking her place. And this is pretty interesting because you just had, we have a number of mergers that I want to take a look at today. So Nippon Steel wants to buy U.S. Steel for not a lot of money, probably 12 or 13 billion dollars, and actually judges blocked that. I couldn't put that on the FTC, but judges blocked that. And in truth, we're not very good at making steel. I think Nippon Steel would make us better at making steel, and probably save some jobs. But the labor unions in Pennsylvania specifically have been heartily against it. So Biden's been against it. Trump sort of is against it. It's being blocked on national security grounds. It may or may not come through. We'll have to see if that changes in the new administration. Nippon Steel is looking to appeal that decision or push it again. But let's look at slide number 1. Here is something Kroger and Albertsons. This is a big supermarket chain who 2 federal judges in, I believe, Washington, Colorado, have blocked it, and the FTC has been vociferously against it. So, I took a look and I said, I don't really know either of these supermarkets. So Kroger's in the blue dots and Albertsons in the yellow dots. So there's not a lot of overlap except in sort of Washington and Oregon and Colorado, and they're actually going to sell. The merger would have them sell several hundred stores, so they wouldn't own be the only player in those states. But yet, these judges have blocked it. The government's against it, and you're saying to yourself, well, supermarkets are pretty tough business. At the end of the day, you're talking about 6 or 7% margin on a good day. And I just remember when I first moved into my house in the suburbs, I went to Stop and Shop a lot. I probably did maybe 70% of my shopping at Stop and Shop. Over the last 15 years, that percentage has probably dropped to 20%. I only go to Stop and Shop for very now specific things. One of my daughters likes a specific shampoo that they have a good price there. If I don't want to buy things in bulk, then I go to Stop and Shop, but I don't go anymore. I go to Costco, I go to Trader Joe's, I go to H Mart, which is a specialty Asian grocery, which is has a lot of good Asian vegetables and produce that we like. It's tough being in the supermarket business, and I think blocking something like this, maybe something of a mistake. Let's look at another potential merger. Let's go to graphic number 2, which is Mondelez and Hershey. Mondelez has been interested in Hershey before, and they're mostly in Europe. Hershey is, of course, Hershey's Kisses, a big player in confectionery in the U.S., and that combination would be pretty powerful in terms of pricing power, buying cocoa. There's some complications there. The FTC is certainly one of them, but the other one is the Hershey Trust owns all these super voting shares, and they can basically block this if they want. What makes this interesting is not only do we get a new head of the FTC, that the Barclays analysts think that for the Mondelez takeover to go through, they think it might require $240 a share for Hershey. As you can see, Hershey bounced very, very sharply, but we're quite a ways from $240. So there may be a trade in here. I'm not sure if I'm going to do it, but if you're concerned about where the S&P as an index, and we are looking at Hershey's sort of near the bottom of the recent range, maybe there's a little value there if this merger talk starts to heat up between Mondelez and Hershey. And then finally, let's look at graphic number 3, and that's involves Walgreens Boots Alliance, which is, man, that is a really pretty ugly chart.
Yeah.
I mean, talk about going from the upper left to the lower right. A lot of different issues there that they have, and they may be getting taken private by Sycamore Partners. Apparently, have been interested in them before, so Walgreens got a nice bounce yesterday. Whether that will last is uncertain. I mean, this could just be a little bit of market chatter, but it did make some of the headlines. Is there a trade in here? Is there a short-term trade where you buy Walgreens on a flyer and thinking that if they are taken out by private equity, it'll be at some premium to where it is today? Certainly something to think about. But with that in mind, and sort of with healthcare in mind, let's take a quick look at the Dow, if we have that available. The Dow, unlike the S&P 500, isn't doing very well today. It's flat. The S&P, I think, was at last check maybe up 0.5% or thereabouts. And the S&P is being dragged down by United Healthcare, down some 5% on the day, and down almost 12% since Brian Thompson, the CEO, was shot last week. And I want to talk a little bit about that because I think a lot of Americans are unhappy about how the healthcare system works. You always get these headlines that we spend the most on healthcare, but yet our life expectancy isn't going up. And that's for a lot of different reasons, including the fact that we have a big problem with drug overdoses and people who are young sort of die. But the one thing that's really bothered me over the past few days, and again yesterday, is comedians are making jokes about this. And there's something about too soon. And I was just on Facebook. Yes, I'm a Gen Xer, and my kids call me a boomer, but which annoys me because I'm not really a boomer. That's sort of well behind me. One of my Facebook pages, some of my classmates who are generally quite smart, well-educated, and almost completely progressive. The commentary was, well, we don't condone violence, but And it was the whole idea was sorry, not sorry. And that's in my view, a terrible thing to say about a CEO who was, as a practical matter, murdered in cold blood. Whether you agree with the health system or not, the attitude that, um, I mean, you can't really blame the guy, and there is a lot of anger. Is in my way, it's sometimes unacceptable.
Yeah, and here at the New York Stock Exchange last week, as news was breaking that the United Healthcare CEO of the insurance group was assassinated early in the morning on a public street outside of a major hotel in Midtown Manhattan. That was shocking in itself, and as the man had continued all of last week over the weekend until the assassin was caught, it's been quite shocking to see some of the reaction out there. And of course, there has been plenty of anger over the healthcare insurance industry here in the U.S., but it's another matter altogether to be making a farce of what happened. And I do agree with you that some of the reaction out there from comedians as well as just netizens making fun of the situation, it is a bit alarming, isn't it?
It's it's a signal of some sort of deep-rooted issues with how I think a lot of netizens or even other people are looking at this saying, well, we hate the healthcare system. They're all crooks and thieves, and well, you understand where it's coming from. And you want to step back and say, no, it's unacceptable to shoot somebody in cold blood because you don't like their business. I think a lot of healthcare executives have taken their bios off their websites and their pictures off their websites. I'm sure there are people who will dox them, who will put their information online. But does it? If you're a cigarette maker, does that make you? If you're Philip Morris or Altria, does that make you vulnerable too? It's just people talk about slippery slopes maybe a little too much, but I don't want to see a slippery slope where it becomes sort of acceptable to go after people who run industries that you don't like, because there's no good outcome out of that. And for sure, there are. I mean, also people have said, and there was an interesting take from the other side of the aisle. This young man, Luigi Manzione, apparently came from an affluent, if not quite wealthy family, a very prominent family. Went to the best schools, valedictorian, 2 degrees from an Ivy League school, and he's writing about, screeds about healthcare, and some people are asking, what are we teaching kids in these schools? And maybe there's a valid discussion to be had there. But I'm hoping that the U.S. healthcare system has a lot of issues. One of the biggest is there's no clarity in pricing. I go get a procedure, I get medication, and because I have good insurance, I don't know what anything costs. There's no clarity in pricing. When there's no clarity in pricing, you don't know what is getting in there. So if there's something that comes out of it, maybe it spurs a movement to improve the healthcare system. Not going to be easy. I mean, Americans are very demanding. We want quality healthcare. We want it fast, and ideally we want it cheap. But you can't have all three. All these countries, people love Canadian healthcare. It's good quality, and it's cheap. Well, cheap in that the whole country pays for it, but it is not fast. And it is a open secret that if you want the procedure done relatively quickly, you come to the U.S. And even Canadian politicians have done that in the past, but they really tried to hide it because if it comes out, the citizens of Canada get very angry because it's an indictment of their system, so to speak. So hopefully something good comes out of it, but man, this is not a good look in terms of what I'm seeing.
Well, I do agree with you. Hopefully this does increase the conversation around healthcare insurance and, of course, affordability, because we think about the cost of healthcare in the U.S. and you hear about stories of people being denied procedures that are life-saving or potentially life-saving. And in addition to that, you think about stories of people going bankrupt because they can't afford payments on the healthcare that they actually receive. But I think it also brings to light the importance of mental health and well-being as well because of what happened.
Right. Perfectly healthy, looked like very athletically fit sort of 26-year-old, apparently dealt with a lot of pain issues. Maybe that affected him, but certainly mental health has been a problem in the U.S. for a generation, and it rears its head more often than we would like, and sometimes with horrifying consequences.
Well, Tai, I'm sure we'll continue to talk about this as this case unfolds, but it does bring to light a lot of concerns surrounding physical well-being, healthcare, the cost of healthcare, and given that we're heading into a new year with a new administration in the White House, we'll keep you updated on any progress here. But I do want to shift our focus on to monetary policy
Yes.
and to China. So what's going on there?
So let's go to slide number 9. The last time we were here over the weekend, China had come out with some very, very strong statements about we're going to boost some of the strongest language that they have used in recent memory, that they were going to boost demand, they were going to have prudently loose monetary policy, something that they haven't had since right after the aftermath of the financial crisis. And I remember saying that Chinese stocks didn't really react because I think some of the commentary came out after or close to after the close. But well, in the meantime, we did see Chinese stocks react on Tuesday their time, as well as Wednesday their time, and the picture is actually not very encouraging. If you look at on the far right, that big red candle, the benchmark Chinese index opened up 3.3% higher, and just sold off the entire way, and closed, down, not lower than where it was before, but not far different, and then was largely unchanged today. And that is sort of the Chinese market's indictment of, show me the money, because it's really, they've promised everything since September. We had that huge rally, and now we've settled. People who are long are long, and I actually think from the price action there that some longs use that pop to take profit. That suggests that they're not confident that they're going to get anything anytime soon. Could it be after the inauguration, sometime in the spring? So I'd expect to see perhaps we get another pop without any real results from the government, that we'll see a little bit more profit taking. So this is probably a sideways trade. Seems unlikely that it'll collapse, but the hopes of a renaissance in Chinese stocks we may have some months to wait.
Yeah, and Tai, while we're on the subject of China, earlier this week we're talking about China back to buying gold. So I do want to take a quick look at where gold is trading. In today's session, we were seeing spot gold prices trading above the 2,700 level. So I think this is a good time to look at gold as well as the U.S. currency. So what's going on?
Let's take a look at slide number 4, the gold chart. I prepared this last night before we traded above 2,700, and there you go. So you have that October 31st spike up to 2,790, a correction, and then a bounce up, and then the $100 Besant correction, and it's been moving higher. I think the last rally, 2.5-3% up above 2,700, is really due to the fact that China started buying again. They only bought 5 tons, but it's a signal that, we're not going to wait for the prices to come down. We want to add to our reserves, and this is still fine. So certainly the market will be looking again every month to see whether they continue to do this, but that's a pretty good signal. Nevertheless, the chart seems to be, sort of, what we in a range, a narrowing range, and looking for a break. Historically, with a chart like this, the break tends to be higher, but I think we're maybe a few weeks ahead of knowing exactly what markets want to do in the new year. The thing that gives me a little bit of pause is silver had come up with gold, but while gold is up a bit today, silver is a couple of percent lower, and that suggests that the gold rally may be getting a little bit ahead of itself. Continue to be long gold, not ready to take any profit, but looks like we may be sideways for a little while. And there's a whole bunch of markets I want to look at. So let's look at graphic number 5, which is Bitcoin. Bitcoin actually, as we speak, I think is trading over 100,000 again. This is the six month chart. We did go up to 103,000, and then the momentum has been sort of flagging a little bit. Is today's price action above 100,000 going to drive a new rally? Again, not that clear. At this stage, I think the market wants to see what the Fed dots are suggesting about 2025 before we really start to move, and then we only have about, after that, a week and a half of trading in generally illiquid conditions, which has never stopped Bitcoin before. Bitcoin trades just 24 hours, unlike most of the other assets, but still awaiting a little bit of impetus. Let's look at graphic number 6, which is the S&P 500. I'm getting just a little bit concerned here. Here's a 1-year chart. We continue to grind to new highs. Actually, the S&P is doing pretty well today. Up at last check, I think maybe 0.5% or so. But it does look like the momentum has stalled. And again, waiting for the Fed, waiting to see what new policies we have had. It's been a tremendous year. Yeah. It's practical matter, 28-30%. Are we going to get another 28-30% for 2025? It seems like that might be a little bit of a stretch. And I wonder if there's going to have to be a pullback and a little bit of profit taking. Let's look at the next slide, graphic number 7, the U.S. dollar. The U.S. dollar, this is the 1-year chart, been doing very well, certainly bounced significantly on the Trump election, but now sort of sideways. The market can't decide whether the fundamentals that will give us a strong dollar. You see the Canadians are at 3.25%. Europe has had a lot of troubles. Their rates are going to be lower. Everybody's rates are going to be lower than the U.S. We'll probably continue to cut them faster than the U.S., at least for the first quarter, if not for the first half of next year. And the only major economy that's raising rates really is Japan. Looks like Japan will raise rates later this month. I can't remember exactly when the meeting is, but looks like that's likely to happen. But nevertheless, for what Trump wants for trade, he wants a lower dollar, but the fundamentals suggest a higher dollar. The dollar remains pretty strong. Good for Americans who want to travel. I know friends who are traveling Japan and looking at dollar yen back over 150, and they're like, this is going to be great. We're going to create great value. We're going to have wonderful sushi. I know at least 3 couples who are traveling to Japan for the holidays to take advantage of that. So this is a good time. The dollar looks like it will stay supported. And then lastly, let's go to graphic number 8. And this is a chart that I'm a little bit worried about. And this is NVIDIA. So looks like we're pausing right now. Gotten to a high of about 150. Been trading between 130 and 150. I'm a little concerned here. The RSI, Relative Strength Index, is flagging. And the other day, we spoke on the show about China looking at NVIDIA's potential antitrust issue with somebody they bought in China. And this is probably less about an antitrust issue than setting the table for what could be a very bruising fight with Donald Trump once he gets into office. So NVIDIA, 16% of their revenue comes from China. That's a pretty big chunk of their revenue. Now, their most important chips, the Blackwell chips, I think even the Hopper chips don't get sold there. They will get sold there anytime in the near future. But when 15 to 16% of your revenues come into question, that's going to make a dent, and make a dent in future revenues, at least for as great as NVIDIA is, for a few quarters. So to me, it's sort of flashing yellow. Does it need a correction back beyond 130? It wouldn't surprise me. I think we'll get people who will buy dips, but the price action is a little concerning. And as great as NVIDIA is, as wide and broad their moat is, when 15% of your revenue comes into some questions, you could certainly see a pullback in the stock, which ultimately may be a buying opportunity. But is that 130? Is that maybe 110 or even 120? But the chart makes me a little nervous.
Well, Tai, as always, great to have you join me here at the New York Stock Exchange. We were able to cover a lot of ground, and as we head into the upcoming week, next week is Fed Week, we'll be back bright and early on Monday morning. So thank you so much for joining me, and thank you for sharing your overview of the broader markets as well as crypto, gold, and individual names.
Oh, thank you for having me.
Thank you, Tai. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sanford TV. And you can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us. We'll be back together on Monday, and 3Pro will be back here tomorrow. Have a great day.